Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody. Today guys we will take a look at the euro currency. Situation on the euro currency is becoming very interesting, so if you would like to know the details, you probably should read our weekly research, because the very important situation, and it has changed drastically on the high time frame chart, I mean the monthly. And in two words speaking, the market really could meet the significant retracement on the monthly chart. There are some reasons for that, although this probably will not change the overall long-term bearish trend, and we still expect to get the parity during the current year. But in the short-term perspective, that could really drastically change the situation on the intraday charts, on the daily time frame charts, since retracement could be really significant. At the same time, the recent data on the non-farm payrolls release probably will be in focus on the coming week, since the market will start to react on these numbers only on Tuesday mostly, since the European markets will open only on Tuesday. And probably it will stand in focus till the end of the week. And by this reason, many significant issues, the concerns that stand right now in Europe. For example, the Greece debt burden, although they have promised to make the first payment to the IMF on the coming week, but still there's a lot of concern about the Greece burden. The disagreement and growing argues among the members of the European Union on the inter and external policy of the European Union. Should it follow the United States blindly, or they should stand with its own view on the situation? Should they follow the sanctions that United States trying to apply and increase in relation to Russia, or they should to make the decision by themselves? Especially this concern and callings right now I have appeared in the Eastern Europe, the Czech Republic, Hungary, even in the Germany and the Italy and some other countries where people are not very satisfied with the blind following to the United States policy. And this is not stands in the in favor of the European interests. The confrontation, the big war in Europe is not really good for European Union. So as you can see, a lot of concerns and questions that were in focus previously probably will be pulled on the backstage on common week, since in the common week the non-farm payrolls release will be the major focus. But later they will come again in the primary position, and in the perspective we do not see real changing in the situation for the euro. And the euro will remain under pressure in the long-term perspective. That's why the common retracement probably will be just a retracement, although this retracement could be significant. And after it will finish, the downward action probably will continue. But there are a lot of details and more information in our weekly research, so if you will read it, you will understand it clearly. So on the intraday charts, on the daily chart, we have retracement that now stands in progress. So recall that we said that market could show really compounded two-leg ABCD retracement, and right now we see that's now that is going on, and market is forming this ABCD pattern. As you can see, that CD leg shows an acceleration and it seems faster than AB. That's a good sign for the possible upward continuation. Trend holds bullish here, and I have to say that the trend is bullish on weekly as well. But right now, market is approaching to the very strong resistance area. That's 1070. You can see that this is first target, the extension of this ABCD 618 extension that's accompanied by the fib level. So that's the agreement resistance. And take a look. That's also the daily overbought. So it seems that on the common week first when the market will hit this area, we should be ready for some bounce down. That will be our trading plan for common week. It will be short week, but still we expect first the reaching of this target, second some retracement down out from this resistance. The next target will stand right here, is 113 approximately, but it's not very interesting for us right now since it stands beyond the daily overbought. It's very significant room above the overbought, and hardly it will be reached in the common week. But to remind our weekly analysis, this target stands in agreement with the weekly resistance, and that also could be treated as the possible target that we will see on the maybe within the couple of weeks. So if we'll take a look at the 4-hour time frame chart, trend is bullish here as well, but now you can see also that this level is 110.70, 110.90 is also the weekly pivot resistance one. So when I have drawn these levels, assuming that market will reach this level, so you can see that I use not this tab for drawing these fib levels, but this one. As we said, our second stage in our trading plan will be retracement down. It's very probable that the target of this retracement will stand somewhere in this area. This will be the weekly pivot point. So you can see market will open above it. And take a look, slightly lower stands the confidence support, 108.50 area. It's very probable that this will be the target of this possible bounce down after the reaching of this level. In other words, that will be the level where we will be watching for possible taking the long position. Also, guys, the combination of the extension with the fib level at the fib level and daily overbought will give us the Jordan-Naples bearish stretch pattern. That's the directional pattern, as you know. Direction overrules trend. So despite the trend is bullish, the directional pattern is bearish, and it suggests that we should be ready for a downward action. Whether we will trade this stretch or not, that's another question. But the fact that if market will reach this area on Monday or on Tuesday, as you can see, we will get the pattern. Also, guys, be aware of the possible wash and rinses here above this top, because some stops have been placed probably here. And as market has strong resistance slightly higher than these levels, very probable that market will move above them, grab the stops. After that, it will meet the resistance and return right back down to the retracement. That could be the short-term bearish pattern that you could use if you will trade it on the intraday charts as the scalp trader. So you could try to take the short position with the target around this confidence or weekly pivot point. So that being said, on euro currency we could join with the solid journey on the monthly chart, because you know, guys, what the patterns mean on the monthly chart. That's the direction for a considerable period of time. That's really big swings of the market, and it's really promising and thrilling if we will really get these patterns on the monthly chart. And the situation on the euro will become very interesting in the nearest future. Second, in the short-term perspective, we have the two-stage trading plan. First stage is reaching 110, 111 area. This targets on the daily chart. And second is retracement down. That probably will keep the most part of the week. That's two stages, and probably that will last within the whole common week, this action. So reaching of the target and retracement. And after that, we will see what we will do, and whether our expectation will be confirmed by the price action.